This is a demonstration of problem M740A, preparing a financial budgeted income statement and balance sheet. Bradley Company has the following post-closing trial balance as of December 31st, 2024, and the problem gives us the post-closing trial balance for Bradley. It also states that the company's accounting department has gathered the following budgeting information for the first quarter of 2025, and then it gives us some additional information concerning when direct materials purchases are paid, and also when direct labor, manufacturing overhead, and other expenses are paid, and then also accounts payable. In the first part of the problem, it asks us to prepare Bradley Company's budgeted income statement for the first quarter of 2025. So we are going to use the information that the accounting department gathered to complete the budgeted income statement. So we start off with sales revenue, which the problem stated would be budgeted at $305,000. Next, we're going to subtract from that the budgeted cost of goods sold, which was shown as $72,000. And that gives us gross profit of $233,000. From that, we're going to subtract our selling and administrative expenses that were given in the problem. And if we take these three and add these amounts and add them together, that gives us a total of $25,900 for selling and administrative expenses, which when we subtract that from gross profit gives us income before income taxes of $207,100, and the budgeted income tax expense was $41,000. So subtracting that from income before income taxes gives us net income for Bradley for the quarter ending March 31st, 2025, $166,100. Now the second part of the problem asks us to prepare Bradley Company's budgeted balance sheet as of March 31st, 2025. So to do that part of the problem, I took first the information that was provided in the post-closing trial balance, and I set up T accounts with those beginning balances. So for instance, cash had a beginning balance of $15,000, accounts receivable balance was $23,200, raw materials was $11,000, finished goods inventory was $25,900, equipment was $125,000, accumulated depreciation was $35,000, accounts payable $13,600, and common stock was $150,000. And then over here I have the beginning balance of $1,500 in retained earnings. So now I'm going to use the additional information that was gathered by the accounting department to complete these T accounts so that we can get the ending balances in each of the accounts at the end of the quarter. So we're going to start off with the cash account, which had a beginning balance of $15,000, and we're going to add to that our budgeted cash receipts, which were given to us as $263,500. Now we would have had a credit to cash for payments of accounts payable. So we're going to go down to accounts payable and we're going to look at it next. It had a beginning balance of $13,600. The problem gave us information on the direct materials purchases and said they were paid 70% in the quarter when they're purchased and 30% in the next quarter, and that the accounts payable at December 31st are paid in the first quarter of 2025. So we know that this balance would have been paid in the first quarter, and we were given the amount of the direct materials purchases of $32,000, and we were told those were all on account, and then we would debit accounts payable for 70% of that. So when we take our total debits for accounts payable, that would be $36,000, and then we would have credited cash when we paid those. The problem also stated that we paid all of our direct labor, manufacturing overhead, selling and administrative costs, and income tax expense in the quarter incurred. So we would also have a credit for the $41,000 of income tax, and we also purchased a new piece of equipment for $43,000, so that would be a credit to cash. And then we would have a credit for all of our direct labor, and then all of our cash manufacturing overhead. So we had $1,300 of depreciation in the overhead, but we would only add the two cash amounts for the variable overhead and the insurance and property taxes, and those totaled $3,450. Also, we would have a credit for the selling and administrative costs that were in cash, so all of those except for the depreciation expense. So the total that were paid in cash was $25,350. So to get the ending balance in cash, we take the beginning balance and add our receipts and then subtract all of our credits, and that would give us an ending balance of $117,200. For accounts receivable, we had a beginning balance in the post-closing trial balance of $23,200. It stated in the problem that all of the sales were on account, so we would have a debit for $305,000, and then we were given the amount of the cash receipts of $263,500, which would be a credit. So adding our debits and subtracting our credit would give us an ending balance in accounts receivable of $64,700. Our beginning balance in raw materials inventory was $11,000. The problem gave us the direct materials purchases and said that all of those would be used. So we would have a debit to raw materials for $32,000 and a credit to raw materials of $32,000, so our ending balance would be $11,000. For our finished goods inventory, we started off at the beginning of the quarter with $25,900, and we would have added to that our direct materials that we used of $32,000, our direct labor cost of $12,500 that was given to us in the problem, and then we would have applied or allocated our manufacturing overhead of $4,750, which would have included all of these items, including the depreciation. So when we add our debits and subtract the cost of goods sold that was given to us again in the problem, we would have an ending balance in finished goods inventory of $3,150. We had our beginning balance in equipment, and we made an additional purchase of equipment of $43,000. So that would give us an ending balance in equipment of $168,000. We would have two credits to accumulated depreciation. One would have been for the manufacturing overhead, which the problem said was $1,300 of depreciation, and then another credit for $550 for the selling and administrative depreciation. So adding all those credits together, we would have an ending balance in accumulated depreciation equipment of $36,850. Again, for accounts payable, we had our beginning balance. We credited our all of our direct materials were on account, $32,000. We paid the beginning balance, and we paid 70% of the cost of the direct materials. So adding our credits and subtracting our debits, our ending balance in accounts payable was $9,600. Our beginning balance in common stock was also our ending balance. Then we have our temporary accounts. So we start off with our sales revenue, which was given to us as $305,000. At the end of the quarter, we would have closed that account to income summary by debiting sales revenue and crediting income summary for $305,000. Then our manufacturing overhead, I put it would have had a beginning balance that would have been $0, and we would have debited it for the entire amount of all of the manufacturing overhead, which was $4,750, and then we allocated all of that overhead to finished goods inventory. So that would be the credit. So that account already had a balance of $0. It was all allocated. The cost of goods sold was $72,000, and these are starting our expenses, so that would have been closed to income summary. And $7,000 of salaries expense, that would also have been closed. $2,000 of rent expense, and it would be closed. $1,100 of insurance expense, and then we would only have had the $550 of selling and administrative expense. The other depreciation expense was in manufacturing overhead. And then we had supplies expense of $15,250, and that would also have been closed. And then our income tax expense was $41,000, and that would have been closed to income summary. So each of these expenses have all been credited, and then the total amount would have been closed to income summary with a debit of $138,900. So if we added all those up. So the ending balance in income summary would have been the same as net income, $166,100, and that would have been closed to retained earnings by debiting income summary and crediting retained earnings for $166,100 for an ending balance in retained earnings of $167,600. So that is where all of our balances came from. And then to complete the budgeted balance sheet, we would just take the amounts from our T account. So cash would be $117,200. Our accounts receivable ending balance was $64,700. The raw materials inventory at the end of the quarter was $11,000, and then our finished goods inventory ending balance was $3,150. And then that gives us total current assets of $196,050, and then we need to record our property, plant, and equipment. So our ending balance in equipment was $168,000. And we need to subtract from that our accumulated depreciation ending balance, which was $36,850. And that gave us our total property, plant, and equipment of $131,150, which we would add to our total current assets to get total assets of $327,200. And then the next thing would be to record our accounts payable ending balance, which we calculated to be $9,600. And then our common stock was $150,000, the same as the beginning balance. And our retained earnings ending balance was $167,600. So that gave us a total stockholders' equity of $317,600, which we would add to accounts payable to get our total liabilities and stockholders' equity of $327,200. And that would be the completion of the problem M740A.